Hello, everyone, and thank you for joining today's True Trading webinar. I'm excited to be here with you. My name is 𝗪𝗲𝗯𝗶𝗵 from Traders United. Risk disclaimer. True webinar house rules. Please take the time to read important rules for webinar attendees. Let me start by sharing a little information about myself. I'm a certified Elliott Wave analyst, having earned my level 1 certification back in the year 2012 with a score of 93%. This certification deepened my understanding of market behavior, especially through the lens of Elliott Wave theory. In addition to my work as a Forex technical analyst, I'm also an author and educator. I wrote Introduction to Elliott Wave Theory, a book designed to help traders like you build a strong foundation in understanding the intricate structure of market waves. But my expertise does not stop at Elliott Wave. Over the years, I have expanded my knowledge into broader market analysis, diving deep into market trends, chart patterns, and price action strategies. So whether you are a beginner or an experienced trader, I aim to provide you with valuable insights. With that, let's dive into today's live session. So these are the main topics that we are going to cover inside today's webinar. Okay, let me talk about previous macroeconomic events and data releases. I'm going to cover the previous week fundamental analysis. So let's discuss the BOJ policy rate, the JPY, USDJPY, and the unemployment rate related to Australia, and it has directly related to AUD USD currency pair. Now, let me explain a little bit what is the BOJ policy rate. The Bank of Japan, also known as BOJ policy rate, determines the interest rate applied to excess reserves held by commercial banks at the Bank of Japan. It serves as a key monetary policy tool impacting borrowing costs, inflation, and Japan's broader economic outlook. A higher than expected rate is bullish for the Japanese yen, signaling potential tightening. Conversely, a lower or unchanged rate tends to weaken the yen. Now, on March 19th, 2025, the report and market reaction was the previous number was 0.50%. The forecast remains the same, and the previous number was the same as well. So the actual number was the same, and the forecast and the previous was the same. So there was no change. So as expected, the BOJ maintained its ultra loose monetary policy, keeping rates below 0.50%. However, the USDJPY moved higher following the announcement. Let me show you the USDJPY currency pair chart. So right over here, this was the trend channel. Let me zoom in a little bit. And after the news release, market actually rallied up and it just keep going up over here. So USDJPY moved higher following the announcement, indicating that market participants may have been positioned for a more hawkish BOJ stance, or that broader market sentiment favored the USD. Possible scenarios and USDJPY impact. Okay, if the BOJ raises interest rate above 0.50%, the hawkish surprise, we haven't got it. So we got got the same flat rate. It didn't change. So the conclusion is that the BOJ's decision to maintain rates was in line with the expectations, but the USDJPY still moved higher. Now, this bullish leg could become some kind of a false breakout. So that was the forecast as well, that price action is going to break out of this bearish trend channel, and then it is probably going to print a top and then expect a drop after that. So this suggests that market participants were anticipating more hawkish signals from the BOJ or broader risk sentiment, which actually favored the USD. Moving forward, traders should closely watch the Bank of Japan forward guidance and any shifts in global economic conditions that could further influence USDJPY currency pair. Next one is the unemployment rate in Australia. Now, what is the unemployment rate? The unemployment rate measures the percentage of the total labor force that is unemployed and actively seeking work. It is a key indicator of labor market strength and overall economic health. A lower unemployment rate signals a strong labor market and economic growth, potentially supporting a stronger AUD, meaning Australian dollar. Conversely, a higher unemployment rate may indicate economic weaknesses, putting pressure on the Australian dollar. Now, on March 20th, 2025, the previous number was 4.1. The forecast was also 4.1, and the actual number came out the same 4.1. Now, despite the matching expectations, the Australian dollar versus US dollar currency pair dropped following the release. Let me show you the chart of AUD USD currency pair. So I was kind of expecting this decline, and we got it. Now Aussie is actually trying to rise back up over here, but I was expecting this drop, technically speaking. So price action actually dropped in Australian dollar currency pair after this news release, suggesting that traders reacted negatively. And this could indicate concerns about underlying labor market conditions, weak job creation, or broader risk sentiment favoring the United States dollar. Possible scenarios and impact with the Aussie dollar is that, we got the unemployment rate at 4.1%. It is the same as compared to the previous month, and the forecast was also 4.1. So no change in unemployment rate. So that's not, uh, good for the Australian dollar. Okay, so that's what the expectation. So the unemployment rate report met the expectations, and the Aussie dollar currency pair dropped. This suggests traders were looking for stronger labor market signals. Now, moving forward, we need to watch out for Reserve Bank of Australia commentary and any additional labor market data that could influence expectations for future monetary policy. Previously, we discussed about the euro dollar and pound dollar currency pairs. Let's take a look at euro USD. Okay, euro dollar is actually, I was expecting a drop in euro dollar currency pair. It dropped a little bit lower than my expected level. My expected level was 1.0822. So euro dollar actually dropped lower than that. Anyways, after this decline, I'm now expecting a possible bullish leg, or I would say a resumption of an uptrend. Looks quite possible inside euro dollar currency pair. Now, next one is the British pound. So let's take a look at GBP USD currency pair. Now, British pound is actually overbought at this point in time. If you check out the RSI, RSI was hitting the 70 level. And if you go over to a weekly time frame, it's not overbought. if you check out the 4-hour time frame, it was actually overbought at that time. We even got the divergence scenario over here as well, that price was going up but the indicator was going the other way. So that's the divergence right there. So the way I see GBP USD currency pair is most likely going to move sideways. It might drop a little bit lower, and then after that, price action is probably going to resume the um, uptrend. Okay, I can go over here, and so my expectation is that let me adjust. Okay, I'm using the green color to represent a bullish scenario or bullish price action. So price action could fall a little bit in pound dollar, but overall the trend is up in GBP USD currency pair. Next, let's go over to the PowerPoint presentation. Okay, so let us discuss about current week macroeconomic events and data releases. Number one is the consumer price index CPI for the UK, for the British pound, GBP USD currency pair. So what is CPI YoY? Well, the consumer price index CPI year over year, YoY means year over year. It measures the annual average price of a basket of consumer goods and services. It is a key indicator of inflation trends and reflects the cost of living in the UK. The Bank of England, the BOE, closely monitors CPI data as higher inflation may lead to interest rate hikes, strengthening the British pound, the GBPUSD. Now, if GBPUSD is going to strengthen, then it means you should expect bullish price action in pound dollar. Conversely, lower inflation could signal economic weakness, increasing the likelihood of rate cuts, which may weaken the GBP. Now, on March 26th, over here on March 26, 2005, the previous number was 2.9. The forecast is 3.0. The actual data did not release yet. The market expectation is that the market expects inflation to remain steady um, at around 2.9% to 3%. However, any deviation from expectation could lead to significant movement in GBP USD. If the CPI comes in higher than expected, the market may interpret this as a sign that the Bank of England could maintain a hawkish stance, keeping interest rates higher for longer term. Traders may increase expectations for further rate hikes, boosting demand for the British pound. The GBP could rise as the British pound strengthens against the United States dollar. Now, if the CPI meets or falls below expectations, the market reaction may be different. A weaker inflation reading could indicate that price pressures are cooling, and this may increase speculation about future Bank of England rate cuts, potentially weakening the British pound. The GBP USD could face downside pressure if the market sees this as a sign of slower economic momentum. So that this is what I discussed, that it's quite possible that pound is going to move sideways a little bit and it might actually drops. After that, it is going to resume the uptrend. So overall analysis is that the March 26th CPI report will provide key insights into the UK inflation trends. If inflation remains persistent or exceeds expectation, GBP USD is likely to move higher as traders price in a stronger British pound. On the other hand, weaker than expected inflation may shift sentiment, leading to GBP weakness. So the conclusion is market participants will closely watch the CPI data release as it will influence the Bank of England monetary policy outlook. A stronger than expected CPI print could push GBPUSD higher, reinforcing expectations that interest rate will remain elevated to combat inflation, to fight inflation. Okay. Next one is the core PCE price index, M/M, and that's the news release for the United States of America. And the most affected currency pair is the Euro USD. Now, let me explain a little bit what is the core PC price index. The core personal consumption expenditures meaning PCE price index, and M/M means month over month. It measures the monthly change in prices for goods and services excluding food and energy. It is the Federal Reserve's preferred inflation gauge as it provides a clear picture of underlying inflation trends. If you check out the euro dollar currency pair, we got kind of a pullback over here. Why? Because I was expecting price action to hit the resistance level at 1.0938 and we got that hit. So the sellers basically tried to push the market lower. Now euro is actually trying to rise back up. The way I see it's probably going to move sideways. Overall, I expect further upside in euro dollar currency pair. So the Federal Reserve, which closely watches the core PC data to assess inflationary pressure and guide monetary policy decisions. Higher than expected inflation could lead the Federal Reserve to maintain or increase interest rates, strengthening the US dollar. If the US dollar is going to strengthen, then expect a drop in euro dollar currency pair. On the other hand, lower inflation may increase expectations of Fed rate cuts, weakening the US dollar and supporting the euro USD upside. So on March 28, 2025, the previous number or the expectation, the previous number was 0.3. The forecast or the expectation is 0.3 as well, and the actual number did not release yet. The market expects core PCE to remain at 0.3%, but any surprise in the actual data could trigger significant movement in euro dollar. The market reaction related to the core PCE price index report would be like, if the euro USD, it's already moving up. If you take a look at a price chart, euro dollar actually printed a bottom over here back in the month of January 13th, and since then it just keep going up. So the market, the euro is already moving up. So the market may be anticipating a softer inflation reading or a dovish reaction from the Fed. So if the core PC is lower than expected, meaning less than 0.3%, then it means the inflation is cooling faster than forecast and may reinforce expectations of Federal Reserve to rate cuts later in 2025. A weaker US dollar could obviously push the euro USD higher as traders price in a more dovish Federal Reserve stance. Now, if the core PCE matches the expectation, like 0.3%, the result may confirm the current market outlook, leading to limited impact on euro USD. However, if risk sentiment remains positive, euro USD could continue rising. Now, if the core PCE number is higher than the expectation is 0.3% and will get higher than that, it means that persistent inflation may strengthen the United States dollar as the Federal Reserve may delay rate cuts. Now, this scenario could slow down euro dollar's upward movement or lead to a pullback. So the overall analysis is that the on March 28th core PCE report will be a key factor in shaping Federal Reserve rate expectations and United States dollar movements. Given that Euro USD is already moving up, traders may be positioning for a lower inflation print or a dovish market reaction. If the data confirms softer inflation, Euro USD could gain further upside momentum. Okay, so the conclusion is the market is anticipating a scenario where the Fed may turn more dovish due to slowing inflation. If core PCE comes in weaker than expected, Euro USD may extend its rally. In other words, Euro USD is going to rise up more. Well, that based on technical analysis, I also have the same expectation. And it's going to extend its rally as traders factor in earlier rate cuts by the Fed. Okay, now let's take a look at some of the global market trends for current week. I'm going to discuss about euro, dollar, British pound, USDJPY, and spot gold. So let me go over to a price chart. Let us start with the euro dollar. Okay, so euro USD currency pair, I was expecting a top in euro dollar and we got one over here. This looks like to me kind of a double top or a tweezer top chart pattern over here. And price action is basically, trying to move sideways, I would say. So I would see this as an opportunity or a pullback to join an uptrend in euro dollar currency pair. That's the way I see. Even euro dollar is going to drop. There's another scenario which suggests that price action is going to rise up a little bit and then it's going to drop, completes the pullback, and after this pullback, expect price action to rise up. Okay, so that's the expectation, and price action might try to drop. We have some support down over here, so this is the level which might provide us a support if euro is going to provide us a deeper pullback. Okay, so this area over here, right over here, this area is probably going to provide support if euro is going to rise up, but the decline is just going to be temporarily and euro is going to drop again after that. Then that's the support area which is probably going to provide us a buy trading opportunity. Next, let us take a look at British pound GBP USD currency pair. Okay, GBP USD currency pair, we have some overbought trading with RSI. In 4-hour time frame, there was some bearish divergence and we got the drop. Now, if I check this one out, you see price action is kind of trying to rise up. Let's go over to a 1-hour time frame. Okay, so if you draw this trend line, you see price action is currently trying to test downward sloping trend line over here, and we can draw a trend line like this channel over here. And once market breaks out of this channel, meaning the RSI breaks out of this channel, the chances are that price action is going to resume an uptrend inside GBP USD currency pair. Next one is the US dollar versus Japanese yen pair. Okay, regarding the US dollar versus Japanese yen, I see the overall trend is down. To me, this is going to be just a false bullish breakout inside USDJPY currency pair. Price action might actually tries to rise up a little bit more, but overall the weakness is there in my low. 151.27 is the level which is probably going to provide a good spot for sellers. It is going to be a nice resistance area. Next one, we have the spot gold. Okay, let us take a look at spot gold. Okay, we got this was the channel which I discussed last time. Let me try to select this one. Okay. Okay, this is the one. So we have this nice bullish trend channel over here, and we even got the break to the downside. So this is telling me that spot gold is most likely going to drop, um, just a temporarily drop. Overall, the trend is up in spot gold. Let me show you the higher time frame of spot gold. Go over here. Okay, go to templates. So go over to the monthly time frame. You see price action just keep printing higher swing highs and higher swing lows. So just keep going up, up, up. So it's a nice uptrend. Even in weekly time frame, same stories. And even in daily time frame, price action just keep going up. So I see the current drop in spot gold as just a pullback. Now overall the trend is up, but within the trend uptrend, price isn't going to move up like a straight line. It is going to print up and down waves. So the way I see spot gold is most likely going to drop now. We have this bullish trend channel over here, and let's try to draw a channel over here like this way. Okay. So as long as price action is trying to move lower and staying inside the bearish trend channel, the chances are high that spot gold is going to slide more. It's going to drop more in coming trading hours and in coming trading days. However, if price action breaks out of this bearish trend channel, like let's say you get a bullish breakout, then that's the time to look for possible buy trades inside spot gold. Okay, let's go over to okay, so these are the insider insights, and if you have any questions, feel free to type inside the chat box and I will be happy to answer your questions. Okay, so what you should do next, well, stay tuned for the schedule of next week's trading webinar. You can check out our social media pages to stay updated, and if you want to learn more about trading, just visit Trade Geek and access free trading courses for the courses are available for beginners, intermediate, and expert traders. So do check out the website Trade Geek. So I would say thank you for hanging around. See you at the next trading webinar on Tuesday, April 1st, 2025. So that's it for the time being from my side. Have a nice day and bye bye.